Students, today we are going to discuss a new chapter named as financial statements. Okay, and this chapter is about the final accounts of a company, which is prepared for knowing the net profit, the gross profit, and the balance sheet position of the company. This chapter is very important because a 6 marks question comes from this chapter. So let's start discussing about the financial statement and their components. So first introduction is the financial statement are the end product of the accounting process which reveal the financial result of the specified period and the financial position as on particular date. So financial statement is an end product. At the end it is prepared and it is an accounting process which helps in knowing the profit of the company and the position of the company. It is prepared in a specific period, that is one accounting period, at the end of one accounting period. It is a basic and a formal annual report through which a company communicates financial information to its various users. As in the first chapter of the accountancy, you already know about who are the users of the financial statement. The investor, the potential investor, the creditors, employee, government, tax authority, etc. are the users of the financial information who are really interested in the financial information of the company, and for this we prepare the financial statement. Nature of financial statement. Recorded fact. The first and foremost thing, it is the recorded fact. What we had recorded in the previous books is in the nutshell we study in the financial statement. Accounting convention. It is prepared accounting on the basis of accounting conventions. Postulates on the assumptions and the personal judgment of an accountant. Framework for preparing the financial statement. So first of all, objective of financial statement is to be clear the qualitative characteristics of the financial statement and the component of financial statement. So financial statement is prepared by this cycle. You already know how to prepare journal, ledger, trial balance, and on the basis of trial balance we prepare financial statements. So source document is very important because source document is the main base of recording the transactions in the journal. And after recording in the transaction journal, we prepare ledger and then trial balance and the financial statement. So first objective of preparing the financial statement is to provide the reliable financial information about the economic resources, which have the value in the money, and the obligation, the liability which we have to pay of the business firm. To provide the information about the earning capacity of the business firm, it is also very important to prepare financial statement to know the financial condition of the company, whether it is ready to pay the financial debts of the company. To provide the reliable information about the change in the resources and the obligation arising out of the business activities. To disclose the various accounting policy following in the preparing of financial statement to its various user groups. I already told you who are the users of the financial information, and to disclose the extent possible other related information to the financial statement that are relevant to needs of the users. What are the ideal characteristics of financial statement? First, it must be relevant. Irrelevant information should not be posted in the financial statements. Reliable, it should be real, not a window dressed information. And understandability is very important. It should be prepared in such manner you can easily understand that. And comparable to year to know whether the profit increased or decreased. Importance of financial statement. It is very important to management to prepare policy, to creditor, because creditor are eager to know whether the company is able to pay their debts or not, to banker, because banker provide the financial supports to the companies, so they are also interested to know the profitability of the business. Investors, as they are the owner of the company, so they are really interested, and to the government to know whether the tax is arising from the company is good or bad. Limitation of financial statement. To provide only interim reports. It provide only interim reports. It not provide full report. It is just a statement which include the every item regarding the company. So it is not full information. Aggregated information. You do not know the each and every information of the company. Only aggregated information you can provide. The minor information cannot be provided. No qualitative information. This is the biggest limitation of accountancy itself. So it is the main limitation. And personal biasness. Sometimes the person who is preparing the financial statement is not enough trained, so it will be the problem in preparation of financial statement, and based on historical costs, so it is the limitation of financial statement. So what is the components of financial statement? First is income statement. First of all, we know the income statement include manufacturing account, which is not going to be prepared by you, but trading account and profit and loss account is prepared, and statement of financial position, it is also called position statement, that is balance sheet. First is trading account. So purpose and the type are different things, but you have to only study about the horizontal format, that is called T form, under which the trading account is prepared in the format of ledger account having two sides, debits and credit. So this is the format of the trading account. This is very important notes for you. Before preparation of trading account, you must know what are the components of trading account. Okay, opening stock is written here, closing stock is written here, purchase to less purchase return, return outward, wages and salary, direct expenses, carriage inward, carriage on purchase, duty on the purchase, gas, fuel and power, freight and cartage, octroi, dock charges, excise duty, all the direct expenses which are directly involved in the preparation of goods and services are included in trading accounts. Now profit and loss account. So profit and loss account, here meaning is profit and loss account is an account which all the gains and losses are collected in order to ascertain the excess of gain over the loss or vice versa. So it is the main component of the financial statement because it gives the clear picture about the net profit, and it is prepared operating profit, that is gross profit, or maybe operating profit, non-operating expenses plus non-operating incomes. Okay. So this is the profit and loss account format. You must remember that the trading account, if there is gross loss, it will be written on the debit side, and if there is gross profit, it will be written on credit side. And after that, all the office and administration expenses will be written here, and the trading account is on the credit side. We record all the profits, that rent we receive amount we receive, commission received, interest on investment, sundry debtor receipt, bad debt recovery, sales of scraps, and etc. will be recorded on credit side. So income will be recorded on credit and expenses will be recorded on debit. Balance sheet. What is balance sheet? A balance sheet is a statement prepared with a view to measure the exact financial position of the business on certain fixed date. Importance of balance sheet is to ascertain the financial position, to know the assets and liabilities position, to ascertain the information about the exact amount of capital, and helpful in preparation of book of account in the next year. So what are the characteristics of balance sheet? The balance sheet is the statement, not an account. Remember that. It is very important. The word to and by is not used in the balance sheet. The total of two sides of balance sheet must be equal. That is liability and assets both are equal, and it shows the financial position of the business according to the going concern concept. And the balance sheet does not have debit and credit side. Two-sided are included, which is known as assets and liability side. You don't write ever debit and credit side. You have to write only assets and liability. So this is the format of balance sheet. As on the last date, that is 31st March most probably, and the liability is current liability written first of all, then expenses, then fixed liability, reserves, and then capital. That will be net profit, net loss, whatever. And the asset is also written on the marshalling basis on first of all current assets, investment, and then expenses, fixed asset, and then the long-term investments are to be written. So this is called the marshalling of assets and liability. What is the marshalling? Marshalling can be made in the one of the following two methods, the liquidity or permanence. So you can prepare balance sheet on the basis of that every account you can place in the balance sheet according to their liquidity. The most liquid assets will be written first, and after that another assets, or on the basis of permanence, that permanent asset will be written first and then after liquid assets. So this is the overall marshalling of assets and liability, same as in the liability side. And generally sole proprietor and partnership firm prepare balance sheet in the order of liquidity. Okay, so here video ends. You had to write the important points in your notebook, and before solving question of this chapter you must read all the notes which is given in the video, and after that you prepare question, solve questions in your notebook. Okay, thank you.